Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The markets overnight were relatively whipsawed or volatile, more to the point, after remarks by the US Federal Reserve Chairman Jerome Powell that the central bank is strongly committed to bringing down inflation. He acknowledged that the central bank's battle against high inflation could tip a so far resilient US economy into recession. He went on to say, over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. He went on to say, we anticipate that the ongoing rate increases will be appropriate and the pace of those changes will continue to depend on the incoming data and the evolving outlook for the US economy. US Fed Powell will return to Congress this Friday to give further testimony. Looking at the price action though for the Australian dollar, the market is still somewhat negative as the candle ends into a bearish case. However, that being said, the support or the bullish foundations holding around 68.45.55 should still prove a tough challenge. And if we do see a rejection from this level, which I do anticipate, then we could see the market rebounding back towards 70 cents. As I mentioned, the market was whipsawed overnight from comments from Jerome Powell. And the fact is that we did hit the top side of the range for the euro, which was at 106.15 and then fell back. But do take note that the technical implications is still somewhat bullish, and therefore I won't at this point rule out another test to that top side. And if we see a break of 106.15, then we could see an extension to 106.65, which I am in favour of. Let's see if the bulls can continue this pace into today's session. The slight whipsaw price action for dollar yen still remains somewhat positive after breaking above the 135.5 area. Well, not seen as a key level, just a point of reference of the fact is from the break the market is holding, but the RSI is dropping, putting bearish divergence into play along with the MACD. If this pattern does slip through that 135 level, then we could see at a half, that is, then we could see a further decline back towards the region around 134. Sterling, very whipsawed also overnight, but still monitoring this current pattern. The fact is, I feel that we could still see further upside potential. And if so, looking towards a target of 124 figure 15 and reassess from there. The support at present is seen at 121.70 with a base potentially holding around 121.10.15. I would like to wrap up sterling Kiwi. As you can see, the market took the challenge back to that top side of the range, which was at 196 figure 15, and from the rejection is now put a slight dent into the pattern and therefore could see a return from the top side and look back towards 193 to 191. And this is the last time I'll be viewing this market in the short term. And moving on to the next cross-currency pair, I feel that looking at the sterling CAD, the market also potentially holds to a stronger case to the upside. And if so, could look towards this top side region, which is seen around 161 figure 25 in light of this pattern, especially with this strong candle that we can see here. The support on the broader case holds around 155.5. But in light of this candle that's posted from last night, close to a long-legged doji, I feel the bulls may actually step back in and take the market higher. Wrapping up with gold, well, the market didn't close under 1,830 after a brief challenge beneath there. Did not sustain. However, technically we are still weak, and therefore I would not rule out another challenge to that downside. And if so, a close under 1,830 will put in projection towards a target of 1,800 and reassess from there. The downside call, well, the market for oil continued on, reaching 104 and therefore falling further. The next relatively highlighted in yellow in my report, that was a key level, which was at 101.4080, was also reached. Now I like to sit out now because reaching 104 or even the 101 area was an extension to the downside since the market plummeted from 121 and then through 115. So it's now time to reassess and see where oil can go from current levels. So that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report and also the end of the day wrap.